Is Bitcoin really back in a bull run? Are precious metals now at their peak? And what are the stock markets doing? Trump wants to lower energy prices. That's an important topic, and we'll get into that in a moment. But before we get started, first of all, welcome to a new crypto update video, or rather a general update video. Bitcoin is currently at 95,600 US dollars. We're still, so to speak, stuck in our bear flag, or rather in our rising wedge, which is slowly but surely forming. The funding rates are slowly rising again, and the liquidity is clearly below us. And today is the last real trading day because Monday is also a holiday in the US. Let's take a look at all of this now. There's quite a bit to discuss again, including what my next steps are and what I'll be paying special attention to. But before we get started, as always, feel free to leave a like on the video and subscribe to the channel if you haven't already. And of course, feel free to join the free Telegram token signal group. There you'll always get the latest updates, like when I enter any trades or if something important is coming up. And if you're still looking for an exchange where you can trade all of this, feel free to sign up with my partner exchange, WEEX. You'll find the link for that down in the video description. Just sign up and you can secure up to 11,500 USDT in bonuses by completing a few tasks. And right now there's also this event going on with 2026, where you can also win cool prizes based on your trading volume. So just sign up. All right, let's get started. Bitcoin, as I said, at 95,600 US dollars. We're in our overarching bear flag, or depending on how you draw it, that would be the bear flag, and this here would be the rising wedge in one of these two patterns. Basically, the B wave would now be completed for the time being from my side. Here, we've really hit the 0.382 level perfectly from our downtrend, let's say, from our wave A, the FIB level drawn from our all-time high down to our, well, first low, or at least for now, we have to say at this point we've hit the 0.382. Overall, the zone from 103,000 US dollars to 110,000 US dollars is still possible. That would represent the 0.5 Fibonacci retracement level up to the golden pocket and would still be a possibility for a wave B. What I'm paying a bit of attention to at the moment, let's quickly switch to the daily time frame and turn on our trader's reality indicator. We can see that, okay, from a daily perspective, things don't look too bad. However, we do have a nice green vector candle below us. We've broken through the 50 EMA to the upside for now. This vector over here has also now been very, very well filled at just under 98,000 US dollars. That's this one here. If we zoom in, this purple vector candle. And now let's switch to the weekly time frame, because there it becomes much, much more obvious. For me, this is kind of the decisive phase, whether we're going back into the bull run or if we're just seeing a fake move with exit liquidity being provided right now. Because we've now tested the 50 weekly EMA from below, and that's what has happened in recent months. Or I should say over the past years, it has always been our support whenever we were in a bull run. You could dip below it sometimes, that was never really a problem, but ideally, we shouldn't actually fall below this purple cloud. So that's what happened, and now we're now testing this 50 EMA from below on the weekly chart, right? Testing. Volume is catastrophically low. And for anyone who remembers 2021, it was the same story. We even broke through it back then, couldn't hold it, and then it really was the final move into the bear market. The only difference this time is that we've already broken down through this purple box. So this is now the crucial phase for Bitcoin. We have to get back above it. Ideally, a weekly close above 98,000 US dollars would be a start. And then we also need to continue the upward trend and retest it again so that we're in the clear here. At the current state, I still don't expect that to happen. Why? Because, and I could tell you this 100,000 times, there are crises everywhere in the world. That's still how it is for me personally. It's one reason why it can't keep going up. Yesterday, the stock markets actually performed relatively well. They closed to the upside, I'll just put it that way. The entire banking sector delivered really well. Then TSMC, of course, for the AI sector. And since we're already talking about the AI sector, I told you a few weeks ago, or rather months ago, that at some point the energy issue would come up for discussion. And now yesterday, Trump made a bigger announcement. Trump, that is, moves to make tech giants pay for searching power cost. The problem with AI, or rather, let's just call it a problem because it really is one, is that AI, or more specifically the data centers that provide it, require a huge amount of energy. And in recent months, this has led to, where was it here, the average US retail price for electricity increased by 7.4% in September to a record 18.07 cents per kilowatt hour. We can only dream of that in Germany, but anyway, in the US, that's quite a lot. And you might remember also when it comes to inflation data that energy costs in the US are a major driver of prices, making it harder to get inflation under control. That means if we see rising oil prices, for example, due to something like Iran or the US, where the issue is far from settled, then that could have an impact not only on inflation, of course, but also on the midterms and therefore on Trump as well. And that's a big problem for him. That's why he now wants all the companies to pay for it. And yesterday he basically set that in motion. So keep an eye on, let's say, power producers or energy companies in the US. I've already introduced a few of them to you before. Keep an eye on them. These are, for me, no-brainers for the coming years. Also, uranium companies or others or ETFs, these will have a huge impact, definitely. Let's go back to the charts. Bitcoin at $95,600. There's not much happening at the moment. After the steep climb, it's not really surprising. We have no data today or economic data. Monday is Martin Luther King Day. That means the stock exchange is closed for the first time. Things will get a little quieter. No real news for next Tuesday either. And then not on Wednesday either. So all next week except for starting on Thursday, we'll be covering gross domestic product, PCI, and core rate. Monday through Wednesday will be very, very quiet. That means the markets are also much, much easier to manipulate. The funding rates are slowly but surely, or let me put it this way, they're slowly starting to climb a bit again despite the consolidation. But what really stood out to me, especially when I look at the heat map, is that liquidity has really completely disappeared again here for the past 2 or 3 days. That means, as you can see here, the market seems completely swept clean, and oddly enough, the largest orders are currently sitting at $87,000. And if we take a look, where is the $87,000 mark? Aha, right here again at our support zone down below, where at least for now a lot more liquidity can be found. Volume is clearly declining, so a pullback at this point wouldn't surprise me. But if we somehow lose this area around $92,500, then it becomes rather critical for me, I'll just put it that way, because in the end, the entire upward move we've had here, which to be honest, wasn't really, doesn't look good due to the low liquidity. So we're rising in, or rather with very, very little liquidity, or rather low volume. And if we break below that, it's not a good sign to me. And then this B wave, which is not quite complete at the moment, could then be in place for the time being. And we are moving in the middle of wave C. Since I was asked my short position, yes, it's still open. Nothing has changed in that regard. Let's move on to the altcoins. The altcoins still seem lifeless despite a strong Bitcoin. Honestly, at this point, you really have to say they still look dead. Absolutely nothing is happening there. Solana, same story. Solana, if you took the trade again or whatever, take profits, stop loss at entry, I'll say it again, and then just leave it alone. The 5-wave move should now be completed here for the time being. Bitcoin will set the direction. If the consolidation breaks over the weekend, the altcoins might perform a bit better. But if Bitcoin continues to sell off, then the altcoins will also have a big, big problem. Let's move on to the traditional markets. The dollar is approaching the 100 mark. Why is that important right now? The 100 mark could be interesting for the whole Japan topic because you might remember USD JPY, we are absolutely in the intervention zone. That means Japan has to step in here slowly but surely because of the carry trade. So whenever we are in these extremes down here or in the ones we are currently in, and if things do not improve, Japan will intervene. And at the same time, if we look at the 10-year government bonds, they are already heading back toward an all-time high. The 20-year and 30-year bonds, same picture. This is a big problem, and at some point it's going to blow up in our faces. On the 23rd, January is the next meeting. It is expected that there will be no interest rate hike. The next one will probably not come before April at the earliest, but Japan has to intervene, which probably means buying US dollars. And of course, that's worthwhile again when you're basically at 100 here with the US dollar. That's going to be very, very interesting. That means we now have to keep an eye on the Forex markets. Otherwise, nothing has changed here in terms of trading either. I expect that if Japan does anything at all, the euro will definitely skyrocket as well. The 4 is already difficult now. It's basically hard to read here because it really shouldn't go below 1. Fall? We'll have to watch that, but for me, the euro is definitely still a small long area within the realm of possibility. Let's move over to the traditional markets. DAX. I opened a short position. I'll be honest with you, I opened a short position yesterday. Absolutely risky, but I couldn't hold myself back. So the short is open here, by the way. I don't have a stop loss yet. I'll have to watch how things play out over the next few days. Dow Jones. Nothing. Nasdaq is just drifting along with very, very low volatility, with very, very low volume. That's not what we want to see. And for me, it's really about the last few weeks. Liquidity, that is. This area right here. Everything before Christmas doesn't really count, the 2 weeks before that. But before that, when the markets were really open, now we've been back in the markets for 2 weeks with everything fully open and nothing is happening, really nothing at all. For me, that's simply a warning signal. S&P 500, it's exactly the same. Volume is relatively down. This is not what I want to see. Russell, on the other hand, is at pump levels, or rather keeps pumping upwards, but again at a very, very low level. We don't want to see that either. It's just a bit disturbing. The volatility index is hovering around 18 points again. And otherwise, yes, that's definitely it from my side. Later, there will be another video on smart crypto, commodities, and precious metals for anyone who's interested. And otherwise, I would say that's definitely it from my side. I wish you a nice, successful day, a final proper trading day. I'll just put it that way. And otherwise, have a great weekend. As I said, feel free to leave a like and subscribe to the channel if you haven't already. And then at the latest, we'll hear from each other again, like I said, later on smart crypto or just in general. Then on Sunday for the little update again. That's it from me. Until then, ciao, ciao. And as always, stay crazy.